Hey, what's going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, as well as options, futures, and just really investment goals in general. If you're new to the channel, welcome. To give you a little bit of background about what we're doing here, I've been experimenting with high yield strategies for about a year and a half. So I took a portion of my net worth, about 25%, and I put it into what I call a high yield experiment with the aim to, number one, pay my bills, and number two, maintain and pay down my margin. So hit like and subscribe if you like what we're doing here. Help support the channel. Please know nothing is investment advice here. Not now, not ever. So please do your own due diligence before making any investment decisions for yourself. So what I want to do today, I want to focus on two things. I want to give an update on the strategy, what's going on inside of Cash Flow Life here. And just really talk goals, especially as you get into 2026, right? So first things I wanted to do today, market was kind of flat to slightly up this week. We had kind of I don't know if I'd even call it a mini Santa Claus rally, but definitely uneventful, right? Anticlimactic to say the least. But those, again, are the markets I like. I like sideways markets. I like markets that have enough volatility where my high yield all-weather portfolio here is paying me enough in distributions, right? But also controlling for the risk to the downside. So just to kind of give you some updated stats on Cash Flow Life here. No money went in. I had a little bit of money come out for bills. Right now, the market value across everything, options, as well as the diversified high yield ETF stock portion of the portfolio is currently yielding annualized $244,736.23 out of a roughly $510,000 market value total. So it's yielding right now annually about 48%. And if you watch any of the past videos, that's a little bit on the high side compared to where things have been. And the reason for it is from QDTE and XDTE had monster year-end distributions. So I'm going to chalk this annualized income up as a one-off, nothing that I think is going to be consistent moving forward. But it was nice having those large distributions here to close out the year. So yeah, QDTE, XDTE both had just monster distributions this week. What Roundhill does is they're not paying out everything throughout the year, and whatever, if there's any excess, right, from the zero DTE strategy they do, they'll just pay that out, at the end of the year. Our DTEs was a little bit higher than usual too. Nothing crazy high like QDTE and XDTE, but it was still a nice extra distribution there as well. So I think we'll be closer to that, anywhere from like that 145 to 165,000 right now per year in distributions, closer to that 25 to 30% annualized yield. So 48% this week was really nice. That's a nice annualized yield. If you factor in the 4.5% that I'm paying on my margin, that's a nice spread that I'll take all day long. Equity right now, I've got $380,721.98. And then I'm using, so I've got about 74.5% in equity, and I'm using about 25.5% in margin for a total of $129,816.42. So happy with the numbers. I had two puts. I had two sold puts one on Chipotle and one on Nike, expire worthless on Friday. So that brought my margin buffer back up to 62.5%. I always like to stay above that 50%, have that little extra cushion. And so really happy with, where all the numbers currently sit on the portfolio. Looking out on this week, man, it's historic times. I don't know. I've been watching the gold and silver and precious metals markets, even platinum and palladium, and it has just been something to behold. Still very cautious, man. When things go parabolic, it terrifies me, to say the least. I don't like things that go parabolic. They never end well. But right now, it sure is fun to watch. This is why I think everybody should own physical precious metals, not just ETFs, whether they be high yielding or growth oriented. I think it's important to have some physical. That way, as these paper markets get a little bit overheated and speculative, that it really doesn't affect the physical market that much. So some of my thoughts, I think tomorrow's open, the Asian Open at 3 p.m. Pacific time, when those Asian markets open, is going to be really telling, I think, for what these precious metals do, especially silver and platinum, as they've been going up, 7, 8, 9, 10% a day lately, just back to back to back. So, we're witnessing history. So it's pretty exciting. So what I want to talk about today, though, I want to talk about goals, right? Goals are important. And I think, I had somebody ask me or tell me, in conversation, I don't have $380,000 to do this, right? Well, no problem, right? Whether you have less than it, more than it, whatever. I wouldn't certainly put my entire net worth into the strategy I'm doing here, and I have not, right? Again, if it succeeds, I'm just going to bring over more money. I'm already planning on bringing over $100,000 more next month into this strategy. But yeah, I definitely wouldn't go all high yield everything, right? My goals for cash flow life, I just wanted more time with my kids, right? I didn't want a boss. I didn't want a 9 to 5 it if I didn't have to anymore. So, I wanted to have that time, and as they get older, we only have so much time with them. So that was my reason to start this entire strategy, this entire experiment, to really have the goal of more time with family, with my kids, pursuing hobbies, things that I want to do, travel, not really have to report for the 9 to 5. And so what I just decided to do, I've owned a couple businesses in two different, sectors in the past, made 2 successful exits from both of them. And, what I learned in those experiences, I want to run cash flow life here like a business, right? You got your profit, you got your loss, you've got your expenses, right? And you've got your money that you put back into the business. So my goal is to run this just like I would run another business. Okay. So when I dollar cost average, I'm currently dollar cost averaging $200 back into this strategy every market day, back across all 15 high yield ETFs that I'm currently holding. That's just reinvesting back into the business. That's how I see it, right? I am sheltering some volatility by just dollar cost averaging, not worried about what the price is that day. I am buying more income every day, which helps, shield cash flow life from inflation. And, you got to just put a little back to offset NAV erosion, right? A lot of these high yield ETFs, especially WPay, YMAX, QDTE, XDTE, GLDY, these are going to have, I think, significant NAV erosion over time, right? Whether I think they go up or down in value based on, what the markets are doing. So I want to put a little bit back into them as well. I want to offset a little bit of that. So again, 3, I think, real big benefits there of why I dollar cost average back into cash flow life, AKA this business. Again, it's distributions, right? What am I being paid from the investments inside of it? That's the income, right? The growth, all of that I count as the profit. The loss are my bills, my mortgage. I've got to eat, right? I've got other people to feed, shelter, energy costs, right? Utility costs. So I think one important thing here is that we be mindful of, I think, kind of treating this like a business. And again, this is not financial advice. I want you to make your own choices. But if you do decide to, build an income producing portfolio that will eventually pay your bills, you got to start somewhere, right? So it's, again, having those goals. You don't have to start with a lot of money. You can, you don't have to. But I think if you use margin responsibly, I think it can really start boosting an income portfolio over time, right? Always scared. I'm not scared of margin because I don't use it foolishly, at least in my opinion. I like to stay between using 10 and 30% of the margin that is available to me. I like to keep my margin buffer over 50% at all times. And I can click sell anytime I want. I can sell at anything to pay off my margin quickly. I can move assets over, liquid assets over in 1 or 2 days to cover the margin I'm using, right? So again, it's to offset the margin call, right? Make sure that I never put myself in that situation, right? And then hedging. I've talked about this before. Really, it's. I think if you want a goal of just you're focused on performance and returns, I don't think the strategy is for you. I think that you want to have need over greed. That's the most important piece of it. So you don't want to, I think, focus on returns. You want to focus on risk first. Okay. So you'll see that I, have my long puts on the Qs, my long puts on SPY, and that is going to, I call it my crash protection, my catastrophe protection, where I don't have to worry about my portfolio crashing out, right? Or really just completely imploding from a 50, 60, 70% or worse market crash that I personally think is on the horizon. So again, I think goals are important. You've got to kind of know, if I'm going to do this, what do I want from it, right? I have need over greed. I'm going to control for risk. I'm going to have the income. Hey, if I can get some growth along the way, great. But that's not my primary objective of this cash flow life portfolio. So I think the biggest thing is if you make goals, especially going to 2026, I'd be very mindful that markets, assets in general, they're all at or near all-time highs. I think that we really want to hedge and be mindful of, I think, a potential everything bubble collapsing. I think for sure we have an AI bubble. I don't think it's going to collapse tomorrow, but it will collapse at some point. So whether that is tomorrow, 2 years from now, whenever, I do want to be hedging ready for that. So hope you all had a great Christmas. Just some of my thoughts today. Please like, share, comment below. Love to hear your thoughts, your feedback, and have a great day.